Welcome back to another weekly forecasting video where we looked at the major Forex pairs just to break down some sort of daily and weekly bias. We consider any news that's popped up, anything that's changed fundamentally, and also have a look at the technicals just to sort of aid directional bias. So jumping into the weekly time frame on the dollar index, we've it's nothing new. We've marked out this sell side liquidity run over the past couple of weeks, and we marked out this target, which was actually retraded to from this institutional order flow entry drill, which was very clean price action. However, on the weekly chart, it does look a little bit consolidated. Just close that out of the way. We have mentioned the fact that with this drop off, we want to see some sort of trade back to equilibrium. I marked out this as a long-term target. However, we were talking last week about pairing that with the time of the year and how we don't expect too much expansion going into December. So now being at the end of November, we just want to take that into consideration. So moving to a daily chart to have a bit more of a look on this, we can zoom in a bit, run on sell side, and this has been absolutely perfect delivery of a market maker buy model. So this has been displacement, market structure shift, and just returns to OTE. So if you were to get a fib and market high to low, this would just be fibs locked at the minute, but that, yeah, just the price action, as you can see, every single time just delivering perfectly. And we even had this one right here, and then we had another one right here. Now, we did say because euro was strong as well and the dollar was strong, that this trading idea that we actually marked out a couple of weeks ago, did refine the fib a bit too much. I didn't expect this much heat on a trade. However, we did get that, which is completely fine, but at least the direction was correct in the way it moved, which, you know, as a trader, you've got to be unemotional about these things. You've got to take these as they come. And part of that is just understanding that you can't win every trade. However, the idea was right, which still means we were in sync with the market, which is good for bias, especially if you were looking on a daily bias. I mean, this is all fractal, so market maker model. I'm sure mark out this here, previous day's high swept. And again, perfect delivery, run on buy side liquidity, displacement, and then just melts. So moving back to the daily time frame, because that's where we want to sort of build a bias from. Now, looking more into things, we did actually have the first NFP data come back, which we haven't had for months now because of the government shutdown. And actually, unemployment claims will come out slightly lower, but still as roughly as expected. However, the NFP forecast was 53,000, and we actually got 119,000, which shows positive job growth within America, especially from all of the issues we've been having. And the rate cuts seem to be now having a bit more of a positive effect, which is something we covered on last week, which is good. So this is in line with the technicals pointing towards a higher dollar. Again, we've had displacement from retracement again. We want to see a close, in my opinion, above this buy side target just to show an intention to carry on. We don't want to just be sort of hitting up and wicking around. We want to have a bodied close above before we sort of consider any retracements again. So from the dollar index, I would just be looking at bullish price action, especially all I would consider is a higher dollar trade. I would not expect to short the dollar at the minute, purely because jobs data has come out more positive. Unemployment is a little bit lower, although not too much. And the rate cuts seem to be doing their job. So the FOMC did say they would take this data points at a time. They don't have any carved out path already. So we just want to make sure that we're considering this data. So just to sort of go over this and how I would explain this to you if you're watching it and you wanted a bit of help, I would say we've had better data, which shows positive growth within job markets. So it's good labour data, which actually reduces the incentive for the Fed to cut rates too quickly or by too much, because they want to sort of make sure they can maintain the liquidity within the market and make sure that they don't make too big a changes too soon, just to sort of help that inflationary problem. So this means that the Fed rate cut that is in December, well, the FOMC meeting, there is now a less likely chance of a rate cut. And if there's not a rate cut, investors get more reward for saving their money within the dollar, which means the dollar will trade higher and be more bullish. So again, I can't reiterate enough, I am only considering a higher dollar now. And we spoke a little bit last week about how it was a bit flat on a bias, to be honest. We were trading higher and we'd hit this buy side target and we'd started coming down again. And I was a little bit sort of saying, give it the week and we'll have a bit more of a better directional bias within this. And that's exactly what has happened. So it's a little bit of a lesson for you guys. It is just worth noting that you're not always going to win everything. You're not always going to know where to go with trades. You're not every single week going to have a bang on direction. And you just need to wait until you've got a little bit more data. And that's exactly what we've done. And it's not about necessarily winning every trade either. If you now take a trade, but you have a strong bias and you've got reasons backing that, then a loss feels much more comfortable and you won't have all the psychological issues behind that. So if we have a look at the USD JPY actually, now there's been a couple of things with the the yen economy, sort of the Japan economy, sorry, which has been affecting the yen. We've had the bond yields have cooled off slightly. If we have a look, they've just traded a little bit higher, but they've been sort of trading lower and lower and lower. This is actually the futures, and we've been closing. We've actually closed just in this IOFED here, right there. So if I'm expecting lower yen and a higher dollar, then I actually would probably consider trading the Euro JPY, because with the fact that Japan has had record investments coming from overseas, we expect a potentially higher Japanese yen and we expect a higher dollar, which means if we trade the Euro USD, which is negatively correlated to the dollar, then we can actually get short on this pair. So what I'd want to see from here is I'd want to see it trade a little bit lower. I don't want to make any decisions based off of one candle. However, if we start closing through here with displacement, then this could potentially be a good chance to get short, especially from this weekly close. We want to make sure that we don't just institutional order flow entry drill from here. So just sort of make sure that we have, a good close down here and then maybe get a retracement. So just drop down to a lower time frame to show you guys a bit better. Cross right here. Yeah, something like that would make more sense to me. I don't want to just short from here, as you never want to try and catch the top. But that's how it works for me. So if we have a look at the other pairs, USD CAD, again, same thing, correlated with the dollar. OTE, perfect. That looks like it'll deliver to this target right here. We're always doing the same thing. We're not looking for new models. We're not looking for new things. We're always trying to catch and just continue these uptrends and stuff. And it's delivered really nicely over the past couple of weeks. So that looks good. Now, with the S&P 500, something I wanted to cover with the fact that Trump has actually been talking potentially about getting NVIDIA chips and having an agreement with China, which is huge because China is such a huge market that would actually do a lot for the S&P 500, because it's heavily weighted now on NVIDIA stocks, because NVIDIA has actually got a larger valuation than a lot of countries' GDPs, which is insane. Like, it means that NVIDIA is actually bigger than countries itself. So that's how powerful of a determining factor it is within the S&P 500. It's heavily weighted. So it's something to always consider when looking at trading. And so I only expect sort of higher on the S&P 500. And I don't expect too many lows to be put in. We've had a bit of a retracement. That's completely normal and fine. We do cool off from time to time, but sort of looking at this market, never try and catch the lows. It's just not worth it. Always look for a bias higher, and you'll likely have a lot more success than trying to get short every time. Now, if we look at gold, there's been, again, it's a bit stagnant. I wouldn't be interested in this market too much, especially with it being at the end of the year. Now, one thing we did cover a couple of weeks ago was the fact that gold is an investment that people and investors make when times are uncertain. So people always want to put their money into gold when things are feeling a bit rocky. They don't feel that safe, and they just want to ensure that things are okay. Now, with the outlook on the dollar looking a little bit better and investors getting a little bit of, feeling okay about it, they've cut the rates, data's come out more positive, then I wouldn't be looking at going long again on gold, especially due to the time of the year. I would now leave gold for the rest of the year, just because of that reason, especially because the dollar's now trading a little bit higher and having some sort of support back from the huge sell-off at the start of the year. So that's pretty much what I'm looking at. Now, to bring up the Forex Factory calendar, this was last week. This was the data on the Thursday, the unemployment claims and the NFP that we mentioned earlier. Not too much else happened that week, but if we just cover next week, the Monday, absolutely not worth trading because there's nothing there. The Tuesday, we've got core retail sales and PPI, and we've got unemployment claims again with the US economy. So pretty much the news drivers mainly are Tuesday and the Wednesday, so I'd expect some sort of volatility towards these 2 days. So maybe a little bit of a Tuesday/Wednesday reversal, maybe, if we can pair this. So we know we've got news events on the Tuesday and the Wednesday, nothing on the Monday. So I'd potentially expect manipulation to occur lower on the Monday, maybe a small range day again. Tuesday could sweep and then have displacement, or this could all happen from Tuesday lower and then Wednesday delivers. That's sort of the profile I would expect from the next up and coming week. So whether this happens on the Tuesday or the Wednesday, we'll have to see in review, but if we get convincing displacement higher, then I'd only expect longs on the dollar. So that's about everything, to be fair, for this week that I'm actually considering. Reiterating the importance of waiting when looking at trades. You don't always want to just jump straight back into things, and you know, we left last week as a bit more of to gain a bit of a better perspective and bias and get some data, which worked out well. And this week it's given us a bit more confluence on what we're actually looking for within the market. So I don't think I need to cover any more. I'm going to leave it there. So thank you very much for watching today's weekly forecasting video. If you did enjoy it, you know, please sort of leave some feedback. I'm more than happy to answer any questions that you guys have. And other than that, have a safe week's trading.